స్టార్ట్ చేద్దామా? వెయిట్ చేద్దామా మన ఫ్రెండ్స్ కోసం? Shall we start now? Okay. So we already discussed about which one, Anna? Multiple break-even point. Now we will do one problem regarding multiple break-even point. SRM Limited manufactures and sells a single product whose selling price is how much? 80 per unit, and the variable cost is 32 per unit. Assume that for the first year fixed cost are 9,60,000 and annual sales are 60% of margin of safety. Annual sales are 60% of margin of safety. For the second year, it is proposed to add another product line Y, whose selling price would be 100 per unit and the variable cost is 20 per unit. The total fixed cost are estimated at 13,33,200. Now fixed cost is increased from 9,60,000 to how much? 13,33,200. The sales mix of X and Y. Previously we have only one product, that is X, but now we introduced another product called Y. Due to that there would arise one sales mix. The sales mix is how much? 7:3 ratio. Now for the first year, calculate the rate of net return on sales assuming an income tax of 30%. For the first year, what we need to calculate? Net returns. How you will get net returns? Contribution minus fixed cost, you will get gross profit. From gross profit, if you deduct tax portion, you will get the net profit divided by sales. Net profit divided by sales, you will get net return on sales. Next, for the second year, at what level of sales would SRM Limited? For the second year, at what level of sales would SRM Limited break even? Give separately for both X and Y and break even sales in rupees and quantities. Now for the second year, what is happening? Y is included in the production line. For the second year, we need to calculate what, Nana? Break even point for X and Y. Give separately for both X and Y break even sales in rupees and quantities. We need to calculate break even sales for the second year for both products, that is X and Y, in both quantities as well as rupees. Shall we do it now? Now question 1, we are answering for question number 1. First, write down the data whatever available. First, what is the selling price we have? 80. Now what is the variable cost we have? 30, 32. Next, what is the contribution? What is the contribution, Nana? 48. Now, assume that for the first year fixed cost is 9,60,000 and the annual sales are at 60% of margin of safety. Annual sales are at which percent? 60%. Now we all know sales is equals to BEP sales plus MOS sales. Am I right? Now this MOS sales are at how much percent, Nana? 60%. Now BEP sales is equals to how much? 40%. That is equals to sales is 100%. Now we need to calculate which sales? BEP sales. We have data readily available. So for calculating BEP sales, what we need? BEP sales in rupees. For BEP sales in units, it is fixed cost divided by contribution per unit. For BEP sales in rupees, fixed cost divided by PV ratio. Now BEP sales in rupees is equals to fixed cost divided by PV ratio. Now what is the PV ratio? PV ratio is equals to 48 divided by 80 into 100. 60%. How you will get PV ratio? Contribution divided by sales. Now what is the fixed cost we have? 9,60,000 divided by 60%. That comes to, what is the amount of BEP sales? 16 lakhs. 16 lakhs is our BEP sales. If you see here, BEP sales is how much? 16 lakhs. That is equals to how much percent, Nana? 40%. Now BEP sales is equals to 40% of total sales. Then what is the total sales? Now total sales is equals to 16 lakhs divided by 40 into 100. That comes to 40 lakhs. Am I correct? Now our total sales is how much? 40 lakhs. Now we all know, out of 40 lakhs, what is the contribution? Now total contribution is equals to, how you will get total contribution? Sales into PV ratio. We know sales, we know PV ratio, like 40 lakhs into 60%. That comes to 24 lakhs. This is sales into PV ratio. Till now any doubts? First we calculated contribution, then we calculated PV ratio, after that we calculated BEP sales. Now BEP sales is at how much percent? 40%. Why? Total sales is 100%. Out of total sales, 60% is belongs to margin of safety sales. Balance 40% is equals to BEP sales. Now 16 lakhs is our BEP sales. That is equals to 40%. If 16 lakhs is equals to 40%, then what is the 100%? 40 lakhs. Out of 40 lakhs, in 40 lakhs we have variable cost as well as we have contribution. Now what is the amount of contribution? 40 lakhs into PV ratio. That is 24 lakhs is our contribution. Now minus which cost? Fixed cost. How much? 9,60,000. Now gross profit. How much? 14,40,000 minus tax at the rate, how much percent, Nana? Tax percent 30%. How much it is? 10 lakhs, 14,40,000 into 30%. 4 lakhs, 4,32,000. That comes to 10,08,000. This is net profit. Am I right? Now net return on sales is equals to net profit divided by sales. That comes to, what is the net profit we have? 10,08,000 divided by, what is the sales we have? 40 lakhs into 100. How much? 25.2%. What is the net return on sales? 25.2. Now what we did in this question, first the available data they given is selling price is 80, variable cost is 32. Then we calculated contribution. How much it is? 48. After that, we know contribution per unit, we know selling price per unit. Contribution divided by selling price, you will get PV ratio. Now in the question itself they said total sales are at 60% of margin of safety. That means out of total sales 60% sales is belongs to margin of safety sales. Then what is 40%? BEP sales. Now we have data to calculate the BEP sales. Am I right? What is the formula for calculating the BEP sales in rupees? Fixed cost divided by PV ratio. What is the fixed cost we have? 9,60,000 divided by what is the PV ratio? 60%. So 9,60,000 divided by 60%, we got a BEP sales of 16 lakhs. Now this 16 lakhs is equals to how much? 40%. If 16 lakhs is equals to 40%, then what is the sales value? 16 lakhs divided by 40 into 100. Now total sales is 40 lakhs. Now in this 40 lakhs we have two things. One is variable cost, another one is contribution. Now what is the contribution percentage in total sales? 60%. Now 40 lakhs into 60%, how much we got as a contribution? 24 lakhs minus fixed cost. How much? 9,60,000. We got a gross profit of 14,40,000 minus tax at the rate 30%, that is 4,32,000. If you deduct tax from the gross profit, we got a net profit of 10,08,000, that is net profit. Now in the question he asked us to do or calculate net return on sales. Net return on sales. What is the formula? Net profit divided by sales. So net profit is 10,08,000 divided by 40 lakhs, that is 25.2%. Any doubts regarding this question till now? No? Okay, done. Next. For the second year, it is proposed to add another product line whose selling price would be how much? 100 per unit and variable cost is 20 per unit. Now, here he asked us to calculate break-even sales in rupees and quantities. Break-even sales in rupees as well as quantities. Now, we will calculate break-even sales in quantities. After calculating the break-even sales in quantities, if you multiply that quantity into selling price, what you will get? You will get in rupees. Here, for the second year, okay, the sales mix of X and Y would be in 7:3 based on value. What is value? What is meant by value? Value means rupees. Volume means unit. In previous session, we discussed about multiple break-even point in units. Fixed cost divided by contribution per batch. Here we need to calculate PV ratio per batch. What is it? PV ratio per batch. How you will get PV ratio per batch? PV ratio into share, weight of the share. Next, PV ratio into weight of the share. PV ratio of A into weight, PV ratio of B into weight. You will get the combined PV ratio. Now, how many products? X, Y. What is the selling price of X? 80. What is selling price of Y? 100. I think 100 only. 100. Now, variable cost. How much it is? 30 to 20. Now, contribution. 48. How much? 80. Next, PV ratio. How much? 60%, 80%. Am I correct? Next, weight. If you see here sales mix, what is the sales mix? 7:3. That means in total batch 70% is belongs to X and 30% is belongs to Y. Now what is the weight? 70 or 0.7 and 0.3, or you can directly write it as 70% and 30%. That's it na. Now multiply PV ratio with weight. 60 into 70%, how much? 42% and 24%. Now what is the combined PV ratio? Add it. 66%. What is the combined PV ratio? 66%. That is the PV ratio for entire group or entire company, including X product and Y product. What we did in previous problem, we multiplied with 7 into 3, 7:3 with this contribution. But here he asked to calculate which one, Nana? Break even point, but in the break even, multiple break even point, in the point of value, not volume. If he given in the volume, then we will directly multiply with the contribution. But he asked us to calculate according to value. Whenever they asked in rupees, use PV ratio. Whenever they asked us to do in units, use contribution per unit. Okay. Now what is the formula? Same. Multiple break even point is equals to fixed cost. What happened to this one, right? Fixed cost divided by PV ratio. Yes. Or you can get like this as well. Now do one calculation. Now in a batch, how many products of X are there? 7 na? 7 into what is the selling price? 80. 7 into 80? 560 M plus. And how many products of Y are there? 3. 3 into what is selling price? 100. 3 into 100? 300 M plus. How much you got? 860 na? No. What is the contribution per unit of X? For X it is 48. 48 into 7? 336 M plus. Next, what is the contribution of Y? 80. 80 into 3. Total 576 divided by 860 into 100. 66.97. Almost 66% only, no? That's how we got 66%. Okay. Now, so if you do total calculation also, you will get PV ratio same 66%. If you do like this also, you will get contribution like 60% into weight 70%, that is 42% plus Y. The contribution PV ratio is 80% into what is the weight? 30%. You got 24, total 66%. Now, what is the fixed cost in total? We have 13,33,200. Am I correct? 13,33,200 divided by 66%. 20 lakhs. 20 lakhs 20,000 is our what? BEP sales. Our BEP sales for entire company is how much? 20 lakhs 20,000. Now out of 20 lakhs 20,000, we need to give share 7:3. 20 lakhs 20,000 divided by 10 into 7. 14 lakhs 14,000. For Y 6 lakhs 6,000. This is in terms of rupees. In terms of rupees. Now in terms of units, how you will get? Divided by selling price. This is sales, total sales. If you divide this total sales with the selling price, you will get in units. Now what is the selling price? 80, 100. How much? 675. Next, 6060. That's it. The ratio of x is to y must be 7:3 for what, Nana? For value only, not for volume. Here, this value is in the ratio of 7:3, but not in the ratio of but not for the units. They asked the ratio for which one, Nana? Value, nothing but for rupees, but not for units. That means if you sell for 2 lakhs, sorry, how much? 20 lakhs 20,000, then you will reach a point to or nothing but break even point or break even sales. That means it will recover your entire which one, Nana? Fixed cost. Any doubts regarding this? Whenever they ask us to calculate in units, use contribution per unit. Whenever they ask us to calculate a BP in rupees, use PV ratio. గుర్తుంటుంది కదా? మర్చిపోతారా మధ్యాహ్నం ఈవినింగ్కి? Next, sometimes they given 2-period data and ask us to calculate these things. Sometimes they give 2-period data, like they will give 2 years sales data and 2 years profit data. 2 years sales data and 2 years profit data. Then it is possible to calculate PV ratio. They given 2 years sales as well as 2 years profit. It is possible to calculate PV ratio. Now, if they given 2 years units and 2 years profit, it is possible to calculate contribution per unit. If sales are given in rupees is given, it is possible to calculate PV ratio. If units is given, it is possible to calculate contribution. Now, if 2-period cost is given and 2-period profit is given, then it is possible to calculate variable cost per unit. It is possible to calculate variable cost per unit. Why? In all cases, fixed cost is constant. In this all cases, fixed cost is constant. Whatever it is changing due to which one, Nana? This contribution only. Fixed cost is already constant. If profit is changing, then what is changing? If, for example, your contribution is 10 lakhs. Out of 10 lakhs, fixed cost is 5 lakhs. What is the profit amount? 5 lakhs only. If contribution increased from 10 lakhs to 15 lakhs, then what is the this fixed cost amount? 5 lakhs only. Now, entire contribution is increased and entire profit is also increased. After recovering the fixed cost, whatever contribution you are getting, it will equal to your profit only. After recovering fixed cost, whatever profit we have, after recovering fixed cost, whatever contribution we have, this must be equals to your profit only. Now, at 10 lakhs, your contribution, your fixed cost is 5 lakhs and profit is 5 lakhs only. Now, at 15 lakhs of contribution, now how much of contribution increased? 5 lakhs. Your profit is how much now? 10 lakhs. How much of profit is increased? 5 lakhs only. So once your fixed cost is recovered, your contribution and your profit is same. Your contribution is equals to your profit only. Okay, that is the logic we are using here. That means if sales is increasing, your contribution is also 5 lakhs only. For example, we did a sales of 20 lakhs. We did a extra sales of 20 lakhs and we got a profit, extra profit of 5 lakhs. Now what we did? We did a extra sales of 20 lakhs and we got a extra profit of how much? 5 lakhs. Now this entire 5 lakhs is equals to which one, Nana? Contribution. Why? Because we already recovered fixed cost. Now here 5 lakhs is equals to contribution. Now due to 20 lakhs change in the sales, your contribution is changed by how much? 5 lakh. Now what is the formula for calculating this contribution? Change in profit divided by change in sales. Change in profit divided by change in sales. You will get PV ratio. Now same logic here. In the place of sales, if they given units, it is possible to calculate contribution per unit. Like two period units is given, as well as 2 period profits are given. Then it is possible to calculate which one, Nana? PV, sorry, not contribution per unit. If 2 period cost is given and 2 period profit is given, then it is possible to calculate variable cost per unit. For calculating PV ratio, what is the formula? PV ratio, na? That means rupees. Always remember, if it is PV ratio, always rupees. Rupees means sales. Sales, change in profit divided by change in sales. Always profit will be same. Always numerator will be same. Change in profit or contribution divided by change in sales. Then you will get PV ratio. If you want to calculate contribution per unit, change in profit or contribution divided by change in sales, here units. Sales units. Next, variable cost per unit. To calculate variable cost per unit, change in profit or difference in profit divided by change in cost or difference in cost, you will get the variable cost per unit. Any doubts regarding this one? గుర్తు పెట్టుకుంటారు కదా ఫార్ములాస్, లేదా యూ హ్యావ్ హార్డ్లీ 10 to 12 formulas. All are interlinked. If you remember this all 10 to 15 formulas, you will definitely write for 50% of marginal costing. They given 100% in examination from marginal costing, you are able to answer for 50% if you remember all these formulas. Read the question and tell me the answer. I am giving you the answer that fixed cost for which one? Quarter 2 is 32,000. What he given in the question? For quarter 1, what is the number of units? 5,000. What is the total cost? 35,000. For quarter 2, 8,000. What is the total cost? 44,000. But in the additional information, they given that during quarter 2, the fixed cost reduced by, the fixed cost is reduced by 3,000. Find out the variable cost and fixed cost for quarter 2. Now I am giving you one tip, that whenever we have two variables in the question, it is impossible to solve the problem. Basic mathematics. I am the person who failed in mathematics, giving lecture on mathematics. So in basic mathematics, whenever we have two variables, it is impossible to calculate the problem. So that first we need to make one thing constant. Variable cost is always variable. So we are not going to make it constant, but we are going to make this fixed cost as constant. Now, what will happen if there is no reduction in the fixed cost in quarter 2? If there is no reduction in the fixed cost in quarter 2, then this total cost would at how much, Nana? 47,000. If nothing happened to cost in quarter 2, then this total cost will be at how much? 47,000. Now we make that fixed cost as a constant. Now we will calculate. We will apply the formula. Whenever we have two variables, it is impossible to calculate the or solve the problem, and don't apply formula directly. First make one thing constant. Here I am making this fixed cost as constant. Now if fixed cost is not changed during quarter 2, then total cost is at 47,000. Now we are going to apply the formula. Now we have units, we have total cost. What we will get? Change in total cost divided by change in units. Here they didn't given profit, they given cost. What you will get? Variable cost per unit. Array, semi variable cost formula. What is the formula for semi variable cost? Change in total cost divided by change in units. You will get variable cost per unit, na? Am I correct? Yes, absolutely correct. I am always correct, I know. Like if there is no change in the fixed cost, now whatever change is happening, the entire change is happening due to variable cost only. Am I correct? Here from 35,000 to there is an increase till 47,000. The entire change is happening due to variable cost only. Why? Because fixed cost is always constant. Now there is a change of how much? 12,000 in the cost. Due to what? Variable cost. There is a change of 12,000 in the total cost. Due to which one? Variable cost. For how many units? What is the change in units? 3,000. For 3,000 units, the variable cost is increased by how much? 12,000. We all know variable cost is always increased according to the proportion only, in the same proportion. That means now variable cost per unit is equals to change in total cost divided by change in units. That comes to 12,000 divided by 3,000. That comes to 4 rupees per unit. What you guys learned in group 1, Ray? You don't know basic formula to segregation of fixed cost and variable cost. Whenever we have semi variable cost, we use this formula only for calculating variable cost and fixed cost. Now variable cost per unit is equals to 12. Now fixed cost, then total sorry 4. Total variable cost for quarter 1 is equals to how much? How many units we sold in quarter 1? 5,000. 5,000 into 4, 20,000. Then fixed cost. Fixed cost is equals to how much? 15,000. Am I correct? Total cost is 35,000. Out of 35,000, 20,000 is your variable cost. Balance 15,000 is your fixed cost for quarter 2. Total variable cost is equals to how many units we sold? 8,000 into 4, 32,000. What is the fixed cost? What is the total cost for quarter 2? What is the total cost for quarter 2? 44,000. 44,000 minus 32,000, 12,000. Now what we have? In additional information, the fixed cost is reduced by how much? 3,000. Does fixed cost reduced? Yes only, no? From 15,000 to 12,000. What is the difference? 3,000. Any doubts regarding this problem? No, no? We will learn theory today total regarding CVP analysis with examples, with suitable examples and some problems. Tomorrow fully we will do problems from which one? CVP analysis. Okay, day after tomorrow we will move into this decision making, like make or buy decisions, accept or reject, optimum utilization of resources. Then after that day we will do problems regarding this decision making. Now capacity, at 40% capacity your total overheads is 65,000. 65,000 includes both variable as well as fixed. Now at 75% capacity, what is the total overheads? 91,250. Now in these two, which is constant? In these two overheads, which is constant? Fixed cost is constant. Am I correct? Whatever change is happening, the total change is happening due to variable cost only. That means what is the change in capacity? 35%. For 35% change in the capacity, your total cost is changed by how much? How much? 26,250. For 35% change in capacity, your total cost or total variable cost only. Why? Because fixed cost is always constant. Whatever amount of fixed cost is there in this particular amount, whatever amount is there, whatever amount of fixed cost is there in this particular amount, the same amount will be there in this amount as well. Now what is the formula? Same formula, variable cost per percent. Here the given data is in percentage, na? Variable cost per percent is equals to change in total cost. What is the change in total cost? Divided by change in percentage. Now what is the change in total cost? 26,250 divided by 80, 35%. Speak loudly. 75,000. 35 into 100. 35%. 35. Not 35 only. 750 per percent. For each percent, the variable cost will change by how much? 750. Now, for capacity of how much? 40%. Variable cost at 40% is equals to 750 into 40. That comes to how much, Nana? 30,000. Now, fixed cost at 40% is equals to how much? 65,000 minus 30,000. 35,000. Am I right? Out of 65,000, 65,000 is total cost. Variable cost per percent is how much? 70, or nothing but take it as per unit. Per unit is how much? 75. Now, sorry, 750 into how many? How much percent? 40. So what is the total variable cost? 30,000. Now we have total cost of 65,000. If you minus it, variable cost 30,000, you will left with fixed cost of 35,000. Fixed cost is always constant only. He asked us to calculate at what percent? 90%. Now variable cost at 90% is equals to how much? 750 into 90. 75,000. 67,500. Next, fixed cost at 90% is equals to how much? 35,000 only. Why? Because fixed cost is always constant. Now total cost is equals to how much? 1,02,500. Any doubts regarding this question? ఏమన్నా డౌట్స్ ఉన్నాయా? Whoever do this question, I will give you one chocolate. 10 rupees perk or munch or Kit Kat, whatever you want. If anyone do this question, beer కావాలా? చెప్పండి, ఏదో చెప్తున్నా. మీ బ్రెయిన్ హెడ్లో నుంచి ఆరికాల్లోకి మోకాల్లోకి వెళ్ళిపోయినట్టుంది. What I said, whenever we have two variables, it is not possible to calculate or solve the problem. Here if you see, volume is increased by how much? 25%, as well as total overhead inflation rate, not only in fixed cost, not only in variable cost, total overhead is or fixed cost as well as variable cost both are increased by how much? 5% due to price. Now here we have a change of how much? 3 lakhs. For 2018 and 2019 we have a change of how much? 3 lakhs. This change happened due to two reasons. One is change in volume. Volume is changed by how much? 25%. Another one is how much? Due to change in rate. That is rate changed by how much? 5%. Now I am making this rate is constant. That means if rate is not changed, then what will happen? Now if for 2018 I am taking as a base, that means for 2018 at 8 lakhs my rate is 100 rupees. My rate is how much? 100 rupees. For 2019 what happened? 5% increase. That means my rate is at how much here? 105. Now I am making this 2019 a constant by removing this 5% inflation rate. Now what will happen? For 2000, if nothing changed in, nothing changed in rate for 2019, then total overheads will be at how much, Nana? 9 lakhs divided by what is the current rate? 105 na? Into what is the constant rate? 100. For example, in 2019 the rate is 100%. Now it is increased from 100 to 105. Now I am making it a constant. I am taking it as a base. Now 9 lakhs divided by 105 into 100. 8,57,142.8, 143. That means now if only volume is increased, if nothing happened to rate, if only volume is increased, then for 2019 your total overheads will be at how much? 8,57,143. Now if only volume, that is nothing but if only units is increased, then your total cost will be at how much? 8,57,143. Now what is the difference? What is the difference? Variable cost per percent is equals to, what is the difference? 57,143 for how much percent? 25. How much? 2,285. Now take this as base in terms of volume. If it is at 100%, then for 2018 it is increased to how much? 25. Nothing but 125%. Now for 25% it is how much? For 1% it is 2,285. Now variable cost for 2018 is equals to 57,143 divided by 25 into 100. How much? 2,28,005. This is variable cost. Why? Because here 25% is increased. Now I am taking 2018 as base year for rate as well as for volume. That means for rate also I am taking it as 100. For volume also I am taking it as 100 only. From 100 it is increased how much? 25%. That means for which year? 2018. 2018 variable cost for 2018 is how much? 2,28,572. Then what is the fixed cost? Is equals to 8 lakhs minus 2,28,572. That comes to how much, Nana? 5 lakhs 71,428. This is fixed cost. Now tell me which cost will change due to volume? Which cost will change due to volume? Variable cost only. Why? Because if number of units increases or number of units will decreases, there is no change in fixed cost. If units increase or units decrease, fixed cost won't change. Now, but variable cost will change according to the volume. Am I correct? Now, for 2019, what happened? We have a change of variable 25% in volume as well as rate change of 5%. Now variable cost for 2019. Now, what is the base? 2,28,572 plus how much of amount of volume change? 25%, na? Plus 25%. How much amount of rate changed? 5% plus 5%. Variable cost will affect because of two things. One is variable volume as well as rate, but fixed cost will only affect because of rate change. If rate changes, fixed cost will also change, but if volume changes, only variable cost will change. Now variable cost will is affected by volume, nothing but change in units as well as change in rate. Now volume is increased by how much? 25%. Now 2,28,572 plus 25% plus 5%. I know. Next, fixed cost for 2019. 5,71,428 is our fixed cost for 2018. Now fixed cost is not affected by which one? Volume, but it is affected by rate plus 5%. 6 lakhs. Am I correct? 6 lakhs plus 3 lakhs. What is the total cost for 2019? That's how we got. So you have to remember always one thing. Whenever two variables are there, make one thing constant. Always make this fixed cost or rates, make it as constant and calculate this variable cost per unit, then you will get the answer. It is basic math. It is not basically costing. It is just a basic math. Any doubts regarding this question? First, we calculated the which one, Anna? Variable cost per unit by making rate as constant at 100 rupees. Now rate is changed by 5%. In 2018 the rate is 100%. In 2019 the rate is 105%. Rate is increased by 5%. Now I am making 2019 as also 100%. By making it 2019, what is the total cost? We have 9 lakhs. 9 lakhs divided by 105 into 100. For 2019 total cost is 8,57,143. If nothing happened in rate, nothing affected due to rate, then the cost would at how much, Nana? 8,57,143. Now what is the change happen? 57,143. For how much percentage? 25% change. Now I am taking 2018 as base year. For base year, what is the percentage? 100%. From 100% to it is increased by 25%. 100 plus 25%, it is 125. Now for 25% change, the amount is changed by how much? 57,143. For 100%, what is the amount? Change in the amount? 2,28,572. Now at 100% is nothing but 2018 only. For 2018, what is the variable cost? 2,28,572. Fixed cost, how much it is? Out of 8 lakhs, 2,28,572 is variable cost. Balance is fixed cost. Now variable cost for 2019. Variable cost is affected by two things, volume as well as rate. What is the variable cost for 2018? It is 2,28,572 plus 25% due to volume plus 5% due to rate. Total comes to 3 lakhs. Fixed cost is affected by only rate. Now 5,71,428 plus 5%, we got an amount of 6 lakhs. Do anyone need explanation in Telugu? Anyone? Yes or no? మొహమాట పడితే మీకే నష్టం. మీకు ఎవరికన్నా ఎక్కడైనా డౌట్ ఉంటే సార్ అర్థం కాలేదు తెలుగులో ఎక్స్ప్లెయిన్ చేయండి సార్ అని చెప్పండి, మనం పాస్ చేసుకొని ఎక్స్ప్లెయిన్ చేసుకుందాం. అర్థమైందా? నెక్స్ట్, till now we completed out of 10 concepts, we completed how many concepts? 2 concepts. One is CVP analysis, another one is break even point, including lot of things like margin of safety, 2-period data. Coming into next one is indifference point. Indifference point, it is the level of activity or level of sales or level of output or level of production. You may term it as anything. This is the level of output or activity at which total cost of any two options is same. That means at one particular level of output, if total cost of alternative 1 and total cost of alternative 2 is same, then that is called as indifference point. Indifference point is nothing but there is no difference in total cost for option 1 and option 2. For example, we have two options at one particular level of activity like 10,000 units or 5,000 units. At 5,000 units, your option 1 total cost and your option 2 total cost is matching. That is nothing but indifference point. We all know total cost consists of two things. One is variable cost, another one is fixed cost. Now, indifference point is required to handle following situation. When we use this indifference point, whenever we have situation like this, then only we will use indifference point. If the situation is not like this, we won't use indifference point. Like option 1, 2. In option 1, fixed cost is high. Option 2, fixed cost is low. In option 1, variable cost is low, fixed cost is high. That means in one option, one cost will be high, another cost will be low. In another option, one cost will be low, another cost will be high. Then only, that means in reverse order. The cost is in reverse order, then only we will use this indifference point. Like for example, here fixed cost is high as well as variable cost is also high. What will you do? Which option will you choose? Here fixed cost is high, variable cost is also high. Which option will you choose? Here only variable cost is high, fixed cost is low na. That's why we will use option 2. Directly we are choosing option 2. For example, here in option 1 it is low. Which one you will choose? Option 1 only. Why? Because in this variable cost is high. For example, here it is low. Which option you will choose? Option 2. If situation is not like this, we will directly choose any one option. If situation is like this only, there will be a complexity, there will be a confusion for choosing the option. Now I will explain this one with one example. I am willing to purchase car. I have two options, purchasing diesel car and petrol car. Now which is most economical and most beneficial for purchase? I want to know which is most economical and which is more beneficial. Now for this I will calculate one indifference point, nothing but kilometers, or level of activity, nothing but level of kilometers. Now we all know at indifference point total cost at option 1 is equals to total cost at option 2. Am I correct? We all know that total cost of option 1 is equals to total cost of option 2 at which point? Indifference point. Now total cost of option 1 is equals to total cost of option 2. Now Now how you will get total cost? Variable cost into number of units plus fixed cost of option 1 is equals to variable cost of option 2 plus number of units plus fixed cost of 2. Now we know variable cost of 1, variable cost of option 2, fixed cost as well as 1 and 2, but we don't know what number of units. That's I am taking it as A, number of units, or we don't know which one, Nana, indifference point. We don't know indifference point or IF. We are taking as A. Now variable cost how much? 20 into number of units, which is A, plus what is the fixed cost? 1,50,000 is equals to 50 into A plus 2 lakhs. That's it now. Now 5A is equals to 50,000. A is equals to 10,000. What is 10? What is A? Number of units are nothing but indifference point. That's it now. Now that means at 10,000 kilometers, here variable cost per kilometer, here per km, at 10,000 kilometers, if you choose option A, that means petrol car. If you choose option B, that is diesel car, your cost will be same, your total cost will be same. You can calculate. Now 10,000 into 20 kilometer, 10,000 into 20, how much? 2 lakhs plus 1,50,000, 3,50,000. Now 10,000 into 15, 1,50,000 plus 2 lakhs fixed, 3,50,000. Both are same. That means at 10,000 kilometers, 10,000 kilometers is the indifference point. If you choose A or if you choose B, your cost will be same, your benefit will be same. Now what happen if my indifference point is, or my actual usage of car is less than 10,000? If I am using less than 10,000 kilometers, which car I will choose? I will choose the car which is having low fixed cost. Now if you see here, I am incurring extra amount of 50,000. Now by choosing the diesel car over petrol car, I am choosing how much? Extra 50,000 only, na? I am incurring a cost of how much? 50,000. If I choose diesel car over which car? Petrol car, I am incurring how much extra amount? 50,000. For what? For saving of variable cost per unit of 5 rupees. Why I am choosing this diesel car? Because I am saving variable cost of how much? 5 rupees. I am putting an amount of 50,000 for saving 5 rupees per unit. Now how many units I need to, or how many kilometers I need to run to recover this entire 50,000? Per kilometer I am saving how much? 5 rupees. In total I am incurring how much extra amount? 50,000. Now how many kilometers I need to run to recover all this 50,000? Per kilometer 5 into 10,000, 50,000. That means I need to run how many kilometers of car? 10,000 kilometers. What if I run 9,000? 9,000 into 5, how much? 45,000. Did I recover the entire amount? No, no. I didn't recover how much? 5,000. That means I am not recovering entire my extra fixed cost. That means whenever your indifference point is greater than your sales or your desired sales or kilometers, it is advisable to choose option with low fixed cost. Whenever your indifference point is less than your desired sales or desired kilometers, then it is advisable to choose which one, Nana? Car with high fixed cost. Why? Because, for example, I am running 12,000 kilometers. I am running how many kilometers? 12,000. At 10,000 kilometers only, I already recovered my entire fixed cost, extra fixed cost. Now, I am running extra how many kilometers? 2,000 kilometers. For each kilometer, I am saving how much? 5 rupees. 5 rupees into how much? 2,000. How much I saved in total? 10,000 I saved. Or you can do basic calculation. Like, for example, I am running 9,000 kilometers. For example, I am running car for how many kilometers? 9,000. 9,000 into 20 rupees. How much? Plus, what is the fixed cost? 1,50,000. 3,30,000. Now, calculate for diesel car. 2 lakhs is the fixed cost. Plus 15 into 9,000. 1,35,000 plus 2 lakhs. In option 1, that is in petrol car, our total cost is how much? 3,30,000. In diesel car, it is 3,35,000. Which is best? Petrol car. That is the car with low fixed cost, na? That means here I am writing formula, indifference point. I already wrote here, I think so. Yes, here. What is the formula for indifference point? Change in fixed cost divided by change in variable cost per unit. Change in fixed cost divided by change in variable cost per unit. Now, what is the change in fixed cost in our example problem? 50,000. Am I right? Divided by what is the change in variable cost? 20 minus 15, 5 rupees. 50 divided by 5, 10,000. That's what we got as the indifference point according to the mathematical calculation. Am I correct? Now, what is the decision making point? If your desired sales is greater than indifference point, that means your sales is more than your indifference point. Like I am running 12,000 kilometers. Which option I will choose? Option with high fixed cost. Why? Because at that particular 10,000 indifference point, I am already recovering my extra fixed cost. Now, whatever the extra kilometers I am running, that means 2,000 kilometers. For each kilometers, I am benefiting. I am getting a benefit of how much? 5 rupees. After reaching 10,000 kilometers, for each and every kilometer, for each and every extra kilometer, I will get a amount of how much? 5 rupees extra. If I am not reaching the 10,000 kilometers, if I am not reaching 10,000 kilometers, even though I purchase a diesel car, for not reaching, for every 1 kilometer, I am losing how much? 5 rupees. That means 9,000 kilometers. 9,000 into 5, 9,000 kilometers I reach. What is the difference between indifference point and my actual kilometers? 1,000. 1,000 into 5, how much? That's what we have difference in total cost now. 2,35,000, that is 3,30,000 and 3,35,000. Now, if actual production is more than indifference point, actual production is more than indifference point, that is 10,000 is our indifference point, more than indifference 12,000 is our actual production, then which option will you choose? Option with high fixed cost. What is the option which is having high fixed cost? Diesel car. If actual production is exactly equal to indifference point, then choose any option which will give same benefit. If actual production is less than indifference point, that is 9,000 kilometers, which option you will choose? Option with low fixed cost. Which option? Petrol car. When more than 2 options are given, whenever more than 2 options, here how many cars we have? Petrol, diesel. For example, another car added, electronic. You have to calculate indifference point for AB. petrol and diesel, BC diesel and electronic, and CA electronic and petrol. Then give your interpretations. You have to give range. From this range to this range, petrol. From this range to this range, diesel. Above this range, electronic. Like that you have to give range. When more than two options are given, then we shall calculate indifference point for various combinations. Applying any two options, then give combined interpretation. Various combination applying any two. That means AB, BC, CA. Mostly they will ask you how many? Mostly 3. Up to 3 only they will ask. More than 3 it is impossible to calculate directly using marginal costing technique. You will go with operations management. Like you have assignment, you have transportation, like linear programming problems you have. By using these techniques you will find out. अभी आएगा मजा. I think you got same problem in your group 1 costing. Read it. No. Read the question. Coming into question, a practicing cost and management accountant now spends 0.9 per kilometer on taxi fare for his client work. He is considering two other alternatives, the purchase of new small car and an old big car. Purchase price, how much? 35,000. Old big car is 20,000. Sale price after 5 years, 19,000, 12,000. Repair and service per annum, 1,000 and 1,200. Taxes and insurance per annum, 1,700 and 700. Now, what is the fixed cost we have here? What are the fixed costs we have here? Taxes, repairs and maintenance, and that's it. You purchased the car, you have to charge depreciation every year. Depreciation is a fixed cost only. Now what is the depreciation for new small car? 35,000 minus what is the scrap value after 5 years? 19,000 divided by how many years? 5. 3,200 is your depreciation for every year. Next, for old big car, 20,000 minus 12,000, that is 8,000 divided by 5. How much? 1,600. That is fixed cost for which one? Old big car. Now, he estimates that he does 10,000 kilometers annually. His actual usage is how many kilometers? 10,000 kilometers. Which of the 3 alternatives will be cheaper? Out of these 3 alternatives, which is cheaper? If his practice expands, he has to do 19,000 kilometers. Where will the cost of 2 cars break even and why? Ignore interest and income tax. Now he asked to calculate where will be the cost of 2 cars break even. What is this mean? That is nothing but indifference point. 2 cars break even is nothing but indifference point. That means total cost will be same. Now next, particulars. taxi, small car, big car. First, fixed cost. First, depreciation. Is there any depreciation in taxi? No. You have to just pay the fare per kilometer. For small car, it is how much? We already calculated, that is 35,000 minus 19,000 divided by 5, 3,200. Here 20,000 minus 12,000 divided by 5. How much? 1,600. Am I correct? Next, repair. How much it is? 1,000, 1,200. Is there any repairs for taxi? No. That will be borne by whom? Taxi driver. It is not our headache. Taxes and insurance. How much it is? 1,700, 700. Now tell me, what is the total fixed cost? Nil. 5,500, 900. 5,900, 3,500. Next, variable cost. What is the variable cost? For taxi, he is spending how much? 0.9 per kilometer. 0.9. Here, for petrol consumption per liter, petrol consumption per liter, each liter is giving how much? 10 kilometers. Now what is the petrol price? 3.5. That means you are incurring, for 10 kilometers you are incurring how much? 3.5 rupees. That means per kilometer it is 0.35. Am I correct? Each petrol price is 3.5 rupees, and each petrol, 1 liter of petrol will give you mileage of 10 kilometers. That means indirectly you are spending 3.5 rupees for how many kilometers? 10 kilometers. That means per kilometer you are spending how much? 3.5 rupees. Next, here it is giving how many kilometers? 7 kilometers. That means you are spending 3.5 rupees for how many kilometers? 7 kilometers. 0.5. Now we got all things now. Now he asked us to calculate. He estimates that he does 10,000 kilometers annually. Which of the three alternatives will be cheaper? Now at 10,000 kilometers, at 10,000 km, what is the total cost for taxi? For each kilometer you are spending 0.9 rupees into 10,000 means 9,000. Here how much? 3,500 as a fixed cost, variable cost, as well as we have fixed cost as well. Per year fixed cost is 5,900 plus 3,500, 9,000. For big car 8,000. Which is cheaper? Big car is cheaper. Which car is cheap? Big car. If you purchase big car, your total cost will be, if you are doing how many kilometers? 10,000 kilometers. Then if you purchase big car, your total cost will be 8,500 only. That is cheap. Now he asked us to calculate indifference point for 2 cars, but I will calculate for entire 3. I will give range. I will give indifference point range for all new car, old car, and which one on a taxi. Now I am taking this as A, B, C. Now indifference point. First I am calculating between taxi and small car. What is the formula for indifference point? Change in fixed cost divided by change in variable cost per unit. Oh, no. IF is equals to, what is the change in fixed cost? Here fixed cost is 0, here 5900, that is nothing but 5900 divided by, what is the change in variable cost? 0.9 minus 0.35, 0.455. Done. What is the indifference point? 5900 divided by 0.55. 7,000, 10,727. That is indifference point. Now give interpretation or decision making. Now actual or usage greater than 10,727. If your usage is greater than 10,727, which option you will choose? Option with high fixed cost. Here your actual usage is more than indifference point. Which one you will choose? Option with high fixed cost. Out of these two, which is having high fixed cost? Small car, B. That means small car. Again, if your actual usage is more than 10,727, which one you will choose? You will choose option with high fixed cost, small car. Usage less than indifference point, that is 10,727. Option with low fixed cost, that is taxi. Likewise, calculate for BC. Now, between small and big car. Now, what is the indifference point? Change in fixed cost. What is the fixed cost for small car? 5,900. What is the fixed cost for big car? 3,500. What is the difference? 2,400 divided by change in variable cost 0.55, sorry, 0.351, 0.05. What is the difference? 0.15. That comes to 16,000. Our indifference point for small and big car is 16,000. Now, what is the decision making? Usage greater than 16,000. Option with which car, Nana? High fixed cost. IFC. That is which one, Nana? Small car. Now, usage less than 16,000. Option with low fixed cost, big car. Finally, between which one? Big car and taxi. Now, indifference point. What is the difference between fixed cost? Nil and 3,500. 3,500 divided by 0.5. That comes to 7,000. 7,000. Here fixed cost is, okay, sorry, here this is 0.4. The difference between variable cost is 0.4. Now, how much it is? 8,750. Now, usage usage is greater than 8750, option with high fixed cost, usage is less than 8750, option with low FC. How much for high FC? Here it is big car, and here taxi. If you see, if you interpret here, about 10,727, which car is best? Small car. Even after 6,000, 16,000 also, which car is best? Small car only. Here above 10,000, not only above 10,000, above 16,000 is also, which car is best? Small car. But here if you see less than 16,000, here if you see less than 16,000, when it compared with small and big car, which car is best? Big car is best. That means above 16,000, which car? Small car. Below 16,000, which car? Big car. If you see, if you compare between big car and taxi, above 8,750, which car? Big car. Below 8,750, which car? Taxi. That means from 0 to 8,750, which car? Taxi. 8,750 to 16,000, which car? Big car. From 16,000 to above, which car? Small car. Now, how to interpret here is, now take highest indifference point. What is the highest indifference point out of 3? What is the highest indifference point out of 3? Which one? Second one, that is 16,000. Take this one and take the lowest indifference point. What is the lowest indifference point? Third one, that is 8,750. We don't want this one. We don't need this one. Take highest indifference point, take a lowest indifference point. At highest indifference point, take higher value, greater than. At highest indifference point, take a greater than. What is the greater than value? That is greater than 16,000. Which one? Small car. That means greater than 16,000. Which one, Nana? Small car. At lowest indifference point, take less than value. Highest indifference point, take greater than value. At greater than value, which one is best? Small car. At lowest indifference point, take less than value. At less than value, which is best? Taxi. Now less than 8,750, which one? Taxi. Between these two, which one? Between these two, which one, Nana? Big car. That means less than 8,750. That means from 0 to 8,750. Which car? Taxi. Now 8,750 to 16,000. Big car. Above 16,000. Small car. Now what he asked in the question? If he estimates that he does 10,000 kilometers. 10,000 kilometers lies between 8,750 and 16,000. That means till 16,000, which car is best? Big car only. Above 8,750 till 16,000, which car is best? Big car. Now big car is best for doing 10,000 kilometers. Next, what he asked? What is the indifference point between two cars? What is the indifference point between two cars? That is 16,000 is the indifference point between two cars. That's it. Whenever you have three alternatives for doing the indifference point, do like this. This is all about indifference point. So whatever problems left, whatever topics left, we will discuss tomorrow. I think you guys are already exhausted.